Good evening and welcome to another episode of Night Markets. Financial markets close at 5 p.m. and night markets open at 6 to widen the conversation. So each week I'll be giving you my perspective on what's driving markets as well as my point of view as a family office professional. My name is Jacobus Brink, the Chief Investment Officer and Head of Investment Research at SFO. So amid a busy week for both macroeconomic indicators as well as corporate earnings, major indices closed mostly lower. The S&P Mid-Cap 400 as well as the Nasdaq Composite hit intraday highs on Wednesday, but dropped quite precipitously on Thursday, impacted by weaker earnings from tech giants Microsoft as well as Meta. Value stocks outperformed their growth counterparts during the week, and small cap stocks also outshone their larger cap counterparts. So before we get into macro and markets, let's just check in on the current situation in the Middle East. Tensions spiked this week as Israeli airstrikes in Gaza killed 68 people and struck Beirut's southern suburbs on Friday, dashing hopes for a ceasefire with Hamas and Hezbollah. Among the casualties were another Hamas leader who controlled activities in Gaza. U.S. envoys are pushing for ceasefires on both fronts ahead of the presidential election, but Hamas insists on a long-term resolution, including the withdrawal of Israeli forces. Also during the week, post the massive drop we saw in the oil market of about 6% on Monday, oil prices have now recovered the entire loss to trade on par with the previous week's highs. Then looking at markets and macros, starting in the US, the US job market data revealed some mixed signals during the week. Job openings dropped to 7.44 million in September, the lowest since early 2021, but private payrolls surprised with a 233,000 increase in October. On Friday, however, non-farm payrolls showed a mere 12,000 new jobs, and the ISM Manufacturing Index hit a 15-month low at 46.5, signaling weak demand. So despite the subdued data, the 10-year US Treasury note yield reached a high of 4.37%, reflecting that the bond market could be a little bit more concerned about inflation expectations. And by the end of the week, the S&P 500 fell 1.38%, and the Nasdaq declined by 1.59%. Then moving across the pond to the Eurozone and the UK, the Stocks Europe 600 index ended the week 1.52% lower. Factors included muted expectations for further ECB rate cuts, as well as disappointing earnings, and also concerns over the latest news from the Middle East. In economic news, the Eurozone grew by 0.4% in the third quarter. Despite the fact that it is a low number, it was actually double the prior quarter's pace, with Germany narrowly avoiding a recession. However, inflation did edge up to 2% year-on-year, largely driven by service costs. In the UK, the FTSE 100 dipped by 0.29% as concerns about global growth weighed on market sentiment, as well as concern that we might see some further moves in the UK gilt market. And then moving further east, Japan's Nikkei 225 gained 0.4% after the Bank of Japan kept rates steady, and the yen also hovered near the 152 yen against the dollar level. China's markets also struggled, with the CSI 300 down 1.68%, as the Shanghai Composite also lost 0.84%. Although China's factory activity did improve slightly in October, services growth lagged, and the real estate market saw a modest rebound for the first time in a number of months. And then bringing it back home, South Africa's medium-term budget focused on attracting infrastructure investment, although the budget deficit widened due to some spending pressures. The government plans to create investment trusts for infrastructure projects and may sell some non-core assets to finance public works. The all-share index ended the week down by about 1%, dragged lower mostly by a 4.5% drop in resources. The rand strengthened slightly to close at 17.61 against the US dollar. And then just looking at the week ahead, so this is probably going to be one of the most important weeks of the year. We are seeing the US election as well as the Federal Reserve's policy meeting, and both of these will be driving markets. With the presidential race quite tight at the moment, markets have reacted to shifts in poll numbers. The Fed is expected to announce a modest 25 basis point rate cut on Thursday, with investors mostly focused on Chairman Jerome Powell's guidance on future rate cuts amid a fairly strong economic data of late. And then, as always, I'd like to end off with an interesting investment conversation we had over the past week. This week is going to be all about the elections, and an interesting thing we spoke about was a topic called the keys to the White House, also known as the 13 keys. It's a prediction system for determining the outcome of presidential elections in the US, and was developed by an American historian, Alan Lichtman, in 1981, who actually adapted a prediction method that was designed for earthquake prediction. The system is a 13-point checklist that uses true or false statements. When it sees 5 or fewer items on the checklist as false, the nominee of the incumbent party is predicted to win. But when 6 or more items on the checklist are false, the nominee of the challenging party is predicted to win. The model currently favors a Harris victory, and on Monday morning we saw quite an aggressive unwind of the so-called Trump trade, i.e. Bitcoin down and Treasury yields up. So with the model having a 100% success rate since 1981 and calling all 10 of the last presidents correctly, let's see if Dr. Lichtman can keep his flawless track record intact this week. Thank you for joining me once again on another episode of Night Markets. Financial markets close at 5 p.m. and night markets open at 6 to widen the conversation.